Hi, I'm Martin Kostuik, CEO and Director of Battery Mineral Resources Corp, and I'm very pleased to speak with you today and give you an update on our latest achievements and our look going forward.
Martin, good to see you again. I haven't seen you since you were in London. We did a face-to-face there, but I've got to talk about the good news of the day, or the good news of yesterday. The Chilean constitution, the people said no. Is that good news for mining? Good news for you?
You know, I think it's good news for the country in general, and of course, mining is a big part of Chilean culture and economics and everything else. And I was just returned from Chile a couple of weeks ago, and of course, I took the opportunity to ask everybody that I met what they thought the vote would turn out like, and everybody said that it would get overturned, but they weren't sure by how much. But it turned out well, and I think I say it turned out well because I believe most people feel like the rush to change the Constitution was perhaps gone about the wrong way. It was a rushed process and probably not as informed as it could or should have been. And I think they've resolved now that they've rejected it, that they're going to go about it a different way and a more measured approach, and probably arrive at a more reasonable set of changes. But there will be changes.
Right, and just remind people, obviously the Constitution, the change of Constitution was set about for social reform, although mining was sort of dropped in there. And I guess why miners are interested in it and investors in miners are interested in it is some of the proposals around some of the tax rates for producers in country, potentially could have been punitive. So with regards to the new way, the route forward and the people that you've been speaking to, are they suggesting that perhaps the constituent parts are separated and it's going to be through a legislative process separately, or are they going to bundle it in one big pile as they did last time?
I think it's more of what you said, that it will be the different aspects of the changes that people are looking for are going to be looked at individually and through a process. Much differently than in the approach that they took before, right? So, and for the mining set of things, I believe that it was always said that the changes that they're going to have in terms of the potential royalties for mining companies, they started out saying some pretty draconian things about the different numbers and different royalties that would be applied. And even before the vote, the understanding is that it would be much less draconian. And in fact, they started looking at, and I think we talked about this in my last interview, that they were really looking at how to bring a royalty on the major mining companies. And of course, in Chile, you have three different categories of mines. You've got small, medium, and large, and it's quite simple that way. And they were really targeting the larger operations, which of course were in the lower end of the medium size scale. So we felt, I guess, no matter how the Constitution vote came out, that we were going to be in good shape, that we weren't going to have draconian or even any royalties it looked like imposed on our operations. And so we feel like going forward, that will remain the same.
Okay, so I use this phrase called "small but beautifully formed" to describe your business model. You've just gone lower end of medium, so we'll agree we're somewhere around there. Can you just remind people of the business model that you're employing, because it's kind of unconventional compared to your North American peers?
Well, in terms of you mean in terms of our approach in getting into cash flowing? Is that really what you're thinking? Yes, sure. Well, look, it's quite simple. We acquired the assets of a former producing mine that had about a 9-year operating history. It was operated by a major company called Glencore. Everybody's familiar with them. They invested in it quite well over the years while they operated it. And so when we were given the opportunity to acquire the assets out of insolvency, we just found it to be a great opportunity to come into an operation that was well capitalized, well run, and have a very intense and close look at a restart plan to put this thing back into production, because we feel like that is absolutely the best way to bring value to our shareholders, is to turn BMR from an exploration type company into a cash flowing entity, if that's what you're talking about. So, that's what we're looking at doing, and we've made a lot of achievements along the way. And we can get in and talk about that as we go here.
Well, I do want to talk about it, because people will look at it and go, hey, this is quite small. This is quite small. I get the kind of get into cash flow thing, but you've made a kind of conscious decision between going down one route and t'other, and cash flow is important to you in this model. Why? And help people understand why this is the best way forward.
For us and for our shareholders, I believe this is a great opportunity to go from essentially no cash flow, which is where we are now. We spend money. We're spending money on all of our projects to try and advance them. Getting in and being able to switch that around to getting into cash flowing and using the proceeds from the mine to turn around and continue to advance our assets without having to go back to the shareholders. And for us, going from zero to potentially 40 to 50 million in EBITDA a year, which is the potential we have at Punitaqui, it's a step change. Compare that to, let's say, a Glencore mine announces that they're going to increase production and they might add 40 to 50 million a year. That's really not a big landmark for a giant company like that. But for us, going from 0 to 40 or 50 is a big step. And I think the market's going to realize that and reward us appropriately. And that's what we're looking forward to.
Right. But when I talk to companies who are being acquired by larger operators, they say, well, actually, the big guys, the mid-tiers, they don't need these economic studies. The economic studies are for the market. So the market gets a sense of the scale here, and hopefully it gets some liquidity into the stock. But ultimately, the big guys don't need that data. As a company that's getting into production, can you explain the need for you to put out the 43101 for you to produce economic studies for your own benefit?
Sure. As you know, we just came out with a very robust announcement for our newly acquired resources. And that was the result of nearly 9 months of drilling and 33,000 meters. Those resources were acquired in 4 different areas, one of which was the Sanabria mine, which is the original mine that fed the mill for 9 years. Three of the remaining areas were in areas that had never had resources. So we're very, very proud of what we're able to achieve in bringing in 2 different categories of resources, 6.2 million tons of indicated and 3.1 of inferred. That is the cornerstone of our forthcoming technical report that's going to be coming out in the next few weeks. Now, a technical report is always important because it gives the investors the view that you've got a third party that's unbiased and bound by professional integrity to give their best view and accurate numbers of what's going on. So moving on from that is the cornerstone of our decision to go back into production. We beat our goal of having 4 to 5 million tons quite soundly. So we feel even more confident than ever that this is the right decision, is to dig into the economics with these new resources, finalize our operating plans and monetize this into production. And that's really what the next steps are for us.
And ultimately, that's how you raise the capital you're going to need.
That's exactly it.
Right. So when do you start working out how much capital you're going to need? What's the next phase of economic study?
Well, we've got a pretty good idea of the capital. We were waiting for the results of the resources statement to then compare it to our previous estimate and see what kind of changes we need to make in our mine designs, in our mine schedules and things like that, to tweak, to finalize the economics of that picture, that our view of what we need in order to put this into production in terms of capital.
Right, but if you can't give us as yet any sense of that, because you've inherited a lot of data, you've inherited a lot of infrastructure. Right, so I know you've kind of got in your minds a sense of what that looks like, but when will you be able to give guidance to the market as to what that looks like, how much money you're going to need to go and raise, and how you're going to go about raising what type of money?
Yeah, well, we've always said that we think we're going to need around 20 to 25 million, depending on working capital, and I'm still confident that we're gonna be in that range of numbers, and we're always looking for ways to improve on what that ask is going to be as we go along, as we get more information. All along the way, we've been de-risking this project, looking for risk and opportunities, and we've found many opportunities, and I think we're going to find more. So I think over the next, what you're going to notice while you're following our story, over the next 6 to 8 weeks, you're going to see that we've been able to announce that that we've got the remainder of the funding in hand to put this into production. That's our goal. Okay. And I don't mind saying that because we're working very hard to get towards that goal. We have a lot of interest from parties that would like to be a part of that story in terms of helping us fund it into production.
Right, and I think people should go back to our last interview and sort of understand who the players are, well, who the team is, where they're from, and perhaps access to market may give clarity on that one. But have you, if you are meaningfully advanced on that, you've got a sense of what that split between equity and debt will be? Because I think most shareholders, a $40 million company, be going, 20, 25 million bucks, that's a dilutive exercise. Does it necessarily need to be so?
No. In fact, our efforts from day one, and I'm glad you brought that up, have been to fund this into production using non-dilutive means. And I think that's a very important point for the shareholders to understand, that we understand that dilution is not favorable, and sometimes people have to use it, and that's just the way of the world. But we've been very focused on bringing in non-dilutive means of capital, and we're looking at it on three different fronts. We're looking at it as a prepay on an offtake contract. We're looking at royalties, and we're also looking at the private debt markets, and we have interest in all three options.
Okay, so Punitaqui is the focus. It's the kind of, I guess, cornerstone for you. You are going to need to. There are lots of opportunities around you. You're going to need to go through a process of assessing your own portfolio projects, looking for new portfolio projects to bring in, and be able to assess those in reasonably quick order. Otherwise, it's going to be small baby steps, which may take a long time. The thesis is a good one. Copper, headlines every day of the week about the demand for copper, but you're going to want to ramp up quickly. So how are you going to go about doing that?
Yeah, well, first of all, yes, we're super pleased to be in the marketplace that we're in, because and that's for all of our commodities, the different commodities that our portfolio represents, but certainly copper, and copper is our main focus because of our opportunity to place this great asset into production and into cash flowing. And so it's really our focus right now. I think what you're asking really is how are we going to get there, and what's our next move possibly? And that kind of goes back to when I was talking about how we're going to potentially go from zero EBITDA to 40 or 50 million in EBITDA with the advent of putting Punitaqui back into production. That is a meaningful step for us. And as we look around at our next move, we have these great assets. We have cobalt in Ontario and in Idaho. We've got graphite in South Korea. We have lithium in Nevada. Those are all great assets, but they're a little bit longer term than our immediate opportunity we have at the Punitaqui mine. So we start looking around, and we have been in earnest looking for other opportunities, and we're finding very great opportunities in the country of Chile in the same marketplace that we're in at Punitaqui, that medium-sized range type of operation. So bringing it back to those EBITDA numbers, think about going from 0 to 40, and then in short time with a potential merger or acquisition, which we're seeing lots of opportunities for, going from 40 to 80 or 100 with that next step. And what a great time to buy. We're in a bit of a depressed market right now in terms of being in a great position to acquire other assets. Well, that's where we're headed for. We're headed for that.
It's a great time to buy, for sure. It's not necessarily a great time to be setting up a mine, though. Cost overruns abound at the moment. Inflation, earmarked to be 22% this time next year. So it's an uncertain environment. So we've talked about perhaps a little bit more certainty in Chile because the constitutional conversation we had, a conversation about the constitution earlier. Great, but numbers-wise, money-wise, flow of capital, it's tricky.
It's tricky. We completely agree. I mean, for me to say that inflation isn't going to be a factor in terms of our thinking going forward, no one would believe that. Of course, it's going to be a factor. But one thing we have many advantages, I think, and one of the main advantages is that the mine is very well capitalized. We have all of the fixed assets that you need to go into production. So our capital outlay is quite simple. We're not building things. We're not pouring concrete. We're not bringing in steel. We're simply bringing equipment and workers back in, which of course we have a great access to an amazing workforce that used to work at the mine, many of which would love to come back to the region and get back with their families and work at Punitaqui. So we're bringing in equipment and people and reestablishing processes, and we're going to get going.
Okay, and I guess the other component here is it needs to be factored in is, some of the headlines we're seeing coming out of the environmental department, the Minister of the Environment has been coming down hard on mining companies wanting to get their environmental licenses and move forward into the capex phase, as it were, to build these mines. Do you feel you're at some kind of advantage because you are a historic producing mine, or do you come under the same sort of scrutiny as the rest?
I think both. I think we're going to come under very strong scrutiny, and we have. But we do have an advantage that we have existing permits, both operational and environmental, and we've taken the approach right from the very beginning. And this is over the last 16 months or so that we're simply modifying our existing permits. We are applying for some new permits, but we've found great success and no real hurdles. I think as long as you present the information as requested, and there's no underlying things that come out of the whole process, that you're going to be fine. We work. The mine is located in a very prolific mining area, so people are used to mines and working with miners, and we have plenty of electricity, we have plenty of water. So some of the barriers that other companies have as they go through this permitting process simply aren't there for us. So we feel pretty good about it, but there will be a lot of scrutiny, of course.
Okay, and just in terms of the kind of the blue sky component, I get that the focus is let's get this thing up and running, get cash flow going. At what point do you say, right, we need to be really clear about the expansion component here in terms of through the drill bit or through acquisition, and when do you start talking to the market about some more firm information on that front?
Well, I think that's going to come very soon. We're kind of doing things in a stepwise fashion because we started our engineering programs, our permitting processes, our drilling programs, our environmental studies, all these things about 12 months ago. Now that we've finished the drill program, we have announced our resources. Next step for us is to get this thing into production, to get it funded and into production. And I think very soon after that, we'll be in a great position to start acting on some of the many opportunities that we've seen and that we've been looking for in that medium-sized mining space in Chile.
Right, and can I talk? And you did reference it earlier, but with regards to cobalt and graphite, right? And we've had a conversation with it in our last interview. People, please go and look at the link below on that one. Cobalt pricing looking quite nice, graphite quite nice as well. Are you looking at those assets as a means to mitigate risk in the current portfolio within the Battery Minerals Resources Company, or do you think that there are better ways of monetizing those based on what's happening in the market at the moment?
I think to answer your question, having multiple assets often does reduce risk, especially if you can get these things closer to operations. Then you're dividing up your operational risk as far as what's included under one roof, which is Battery Mineral Resources. We're completely focused on getting Punitaqui funded and into cash flowing, 100%. But we have this great portfolio of projects behind us, which when we do get into cash flowing in the future, then those projects become really a pipeline of projects for us because they're at various stages of development. They're all in this what I would call battery minerals sphere, where you look at the outlook for the gap, the outlook really for the gap between supply and demand and all these mineral resources, all these commodities is increasing all the time. So we feel like we're going to turn around and start paying attention to these once we're in the right position, and whether we develop them purely on our own or we entertain some of the opportunities we're seeing right now to join forces with other people to perhaps bring these to the forefront maybe quicker and more efficiently, then we're going to be looking at those opportunities as well. There's an awful lot of interest in our assets.
Okay. Well, I think the big moment for us, I guess, is 6-8 weeks away with regards to clarity on financing. for sure, because that could be a game changer for you guys. 43101 is great. Nice numbers. Put a little bit of certainty around that, but you need to also, I guess, in the next 12, 18 months, start showing the kind of the scale and ambition of what you're trying to do there in Chile as well. So I look forward to hearing about that one. But Martin, great conversation. Enjoyed that. Enjoying watching the story build. Stay in touch and let us know how you get on. Okay.
No, thank you very much for taking the time, and thanks everybody that's watching this for your interest in the company. And we look forward to continuing to hit our marks and in achieving the things going forward. And we look forward to your support.